If you want to buy a multifamily real estate deal, but you're feeling overwhelmed with all of the different things that you have to take into consideration before you actually buy the deal, stick around because in this video, I'm going to break down 3 of the most important things that you actually need to focus on when you're analyzing a new multifamily acquisition. For first dibs on all new real estate financial modeling and career training videos, make sure to hit that subscribe button and hit the notification bell to be notified every time I release a new video. So if you've been thinking about buying a multifamily property, but you want to make sure that you get your analysis right first, which is a really good thing to do, by the end of this video, you'll know 3 of the most important things to look out for in your next multifamily real estate deal so you can make sure that you're buying profitable deals, especially for your first transaction. Now, I've modeled thousands of multifamily transactions throughout my career, and I've worked on over $1 billion of closed multifamily investment transactions, and I've learned from some of the best in the multifamily industry. Now, obviously, there are a lot of factors to consider when you're buying a multifamily deal. But what are the most important things to think about to make sure that your deal is actually going to work and perform the way that you thought it would? Well, when you've looked at thousands of different multifamily deals, you start to see the drivers that actually make big changes in your underwriting and ultimately your investment returns. And the biggest driver of returns that I've seen in multifamily deals are where you set your rents. So your rents today and also where you believe you can take rents into the future. Now, if you whiff on this, you could be in huge trouble from a return perspective. And once you buy a deal, that's your purchase price. And unfortunately, you can't change that at any time during your hold period. So you want to make sure that you're buying the right deals based on where rents are today, where you think you could take rents, and what kind of growth you're likely to see in your market. So to make sure you get this right, we're going to go over 3 main questions that you're going to want to ask yourself while you're doing your multifamily analysis to make sure that you're dialed in on your rent assumptions. So the first question you need to ask yourself is, what are market rents today for each floor plan at my property? Now, this assumes that the property isn't renovated just today. What is market rent, and is the current owner achieving what market rents are? So if your property has an 800 square foot 1-bedroom unit that's renting for $1,000 a month, and a comparable property in that market that has the same number of bedrooms and same square footage is charging $1,025, then you may have an opportunity to raise rents without even doing any sort of a renovation. So that's a good sign and an opportunity as a multifamily investor, but you first need to know what are market rents today in a do-nothing scenario. Now, number 2 is, what rents can the market support? So if you're looking at renovated properties in the area, renovated comparable properties that maybe were built in the same year but had a recent renovation done, what kind of rents are they achieving? What kind of premiums did they achieve over their classic units? And ultimately, can you get that property to that specification? And do you think a potential tenant would choose your property over that other renovated deal? Now, another thing to take into account is that in any market, there's always an upper limit to what residents will pay. So if you're in a market that has brand new units that are renting for $1,000 a month, and you trick these units out and you put top of the line everything in those units and spend thousands and thousands of dollars to make those units look top of the line, there's still only going to be a certain level of rents that that market can support based on the incomes of the potential tenants in that market. So now that you know what market rents are today in an unrenovated condition and where you think you could take market rents based on a renovated property, the final question is, what is it going to take to get there? So how much money are you actually going to have to spend in renovation dollars in order to get to that renovated scope where you can achieve the rent of your renovated competitors? Now, obviously, this is hard to eyeball, and oftentimes you're going to want a qualified construction professional to go out there and actually give you an estimate of what this cost might be. So you'll definitely want to enlist help in this area and make sure that your construction budget is, again, dialed in to make sure that your return assumptions are realistic. So these 3 assumptions are really going to be some of the most important assumptions that you make in your multifamily deal. So you want to make sure that these are educated assumptions and accurate as far as the information that you have from the market and a construction professional. So I hope that boils down multifamily analysis for you to the most important drivers of returns. Obviously, there are a lot of factors to consider, but those are 3 of the most important when you're analyzing deals. Now, if you want to learn multifamily analysis and commercial real estate investment analysis in general at a little bit of a higher level, I've put together a free 3-part real estate financial modeling crash course, and you can grab that in the link in the description below. So if you're looking to buy your first multifamily deal, or you want to work for a multifamily investment company, or you just want to learn real estate financial modeling to become a better real estate investor if you already own property, I'd highly recommend checking out that course. Now, if you like this video, make sure to subscribe to the channel and hit that like button to let me know that this is valuable content for you so I can put out more helpful content on this channel, and make sure to share it with anyone who might find this information helpful. Thanks so much for watching, and I hope to see you in the next video.